Rent is on the rise in cities across the country.
Tonight, skyrocketing rents forcing a growing number of Americans to think twice about where home is.
It's been making news for months. Rent is up. Rental prices increasing more than 30% in major cities across the U.S.
Lately, the chief international economist at ING echoed this sentiment and stated that the U.S. housing recession is already here. Rising mortgage rates and a lack of affordability are prompting a steep drop-off in demand for housing.
My name is Alex, a realtor that's based in Maryland that started working in 2022. And today we're going to find out if renting or saving for a home is right for you. And before we even start, we need to look at and figure out how much can you afford. First, we need to ensure your credit score is ready for the commitment. The better the credit score, the better the terms for the loan. It's as simple as that. The landlord is taking the credit scores also into account before renting a prospective tenant. This trend does not seem like it'll be going down. More than 73% of landlords use credit checks or a different form to help decide if they're willing to rent to you. This trend has increased from 2010 by 13%. And note, a credit score is vital for both renting and buying. Credit score can seem intimidating, but with the right information you can prove or establish a good credit score to be eligible for renting or buying. A score of 680 or higher is generally considered a good credit score for renting. However, it's worth noting that the rental requirements can vary on different locations, with more expensive areas requiring higher credit scores. On the other hand, while lower credit scores can still qualify you for a mortgage, it may result in a higher down payment and interest rates. It's important to have a good credit score because it can affect your ability to rent or buy a home, and it can also impact your terms of any loans you may take out. But what is a credit score? In simple terms, a credit score is a number that tells the banks and lenders how likely you are to repay a loan. A FICO score 9 is the most important credit score due to its use in real estate, automobile dealerships, and other institutions. The FICO 9 score ranges from a score from 0 to 850, with a higher credit score indicating a better credit history and a greater likelihood of loan approval. A score of 850 is considered the safest for lenders to loan to. In this scenario, a person with a credit score of 850 would likely qualify for any rental unit that they desire, assuming that they meet other requirements such as income. However, a landlord is evaluating potential tenants. Factors such as income and credit are both considered. For example, if a landlord is renting a luxury home and has two potential tenants, one with a score of 750 and an income of $60,000, and another score of 580 and an income of $99,000, the landlord is more likely to choose the tenant with a higher credit score, as it indicates a higher likelihood of a timely repayment. First, we will use the 2836 rule to figure out how much a person can afford that's earning $70,000 living in Bethesda, Maryland. You can afford up to $391,208 with a credit score of 720 or 850. You will get an interest rate, give or take, about 6.5%, and I would recommend a down payment of 20%. In this case, that would be $78,242. Your monthly payments on that would be $2,400 a month. Let's see some real-world examples. Here we have a 2-bedroom, 2-bathroom condo in Bethesda, Maryland. We will be paying an estimate $1,940 a month if we have a 20% down payment of $65,000, so we would avoid the private mortgage insurance. Now, let's say we would want to rent a 2-bedroom, 2-bathroom in the same building. It would cost $1,975 unfurnished. In this example, you'd be spending more than $25 more a month than compared to owning a similar building. Let's visualize how much money you'd be able to be saving if you kept the extra $25 and invested it into I-bonds. So we can get an exact rate of return of 6.89% with a benefit of inflationary protection. Let's expect the property to appreciate 2% give or take a year. In 30 years, we would have a property valued at $588,690.51 and a matured I-bond which would have generated $28,000 risk-free. Now, these are conservative estimates, would have made a total of $291,692.51 in 30 years. If we rented, we'd have generated $0 at a similar time frame. And give or take, that's not even including the rent increases or anything. These stats are just done alone with no rent increases, and we didn't really add inflation as a metric because it would be very challenging to guesstimate it in the future times. Today we've learned the benefits of owning versus renting. Now hopefully this video helps speed your decision making, of course. This video took a good bit of time to make. I appreciate you. Leave a like, comment, or subscribe. Hopefully my next videos will always get better than the last. That's my goal at least. And hopefully I'll going back to my schedule one time a week. And hopefully I'll keep continuing one short a day. I'm trying to have more concepts in my pipeline currently. So hopefully y'all enjoy that in the future. And thanks again for watching. And have a good one. This has been Alex, your informative source in real estate.